One of the dominant themes to emerge from this year's World Economic Forum in Davos, Switzerland, is whether the global economy may be entering a period of realignment as countries like Canada look to diversify away from the United States. If true, what does a reshaped global order mean for the world's second largest economy, China? Joining us now with some perspective is Haining Zha, Vice President and Director of Asset Allocation Research at TD Asset Management. It is lovely to have you here.
Thanks for having me, Kim.
I want to start with the conversation that we've been hearing for a while, but this realignment of the world in terms of economic, trade, political alliances. And one of the many effects is maybe as some countries may be thinking they're wanting to diversify away from the U.S., although some are looking to invest more, but some are looking to diversify away. Is China the beneficiary of that move?
And actually, I think the beneficiary is probably a very strong word. In a world filled with trade barriers and tariff, no country is a beneficiary. Everybody is worse off. The whole world is worse off. But in a relative sense, you can say China is a beneficiary. It's interesting to me that 12 months ago, when you asked people which major economy will turn out to be the biggest loser in a trade war, people would definitely pick China. Nowadays, if you check people who will be the beneficiary, people will point to China. So it's such a dramatic change. And I think from that, it will have huge implications. Because as you mentioned, this world is the world order is transitioning from a rule-based to where each country might probably have to cooperate on an issue-by-issue basis. So, yeah, so the country just need to deal with that.
It's such an interesting, I think, thought experiment. Before, like you said, when you have academic conversations, people think, well, this is what's going to happen. But then you start to dig into the details pragmatically of how things change, and that's what we're seeing as well. The U.S. has done, some work to try and economically isolate China somewhat in what they're doing. But you've brought a chart here that shows us maybe that's not what's happening. It's a trade surplus look at China. So let's bring up the chart and take a look at it. Maybe tell me what you see here and why this is happening.
Right, because first of all, U.S. is taking a unilateral approach. And the unilateral approach is not going to work. While the tariff war is going on, and if you expect all of the other countries to shoot themselves in the foot and cut trade ties with China, that's not going to happen, right? And when U.S. turned into unreliable trade partners, what all of the other countries do is they are seeking some stability in other trade ties, and they find China. And also another factor that is impacting the trade surplus is while U.S. is busy initiating the trade war, China, during all these time, are quietly upgrading their manufacturing capability. Just to give you a few examples, a few years ago, China is a net importer of autos. But now the Chinese EV becomes so competitive, and they are exporting the EVs across the world. And also semiconductor and the high-end manufacturing equipment. If you look at all of these categories among the trade data, they are all rising very fast.
Fascinating. Can I ask about, the trade surplus indicating there's a lot of exports going out and lots of, as you mentioned, maybe higher end, goods going out to the world. But what about domestic demand? Because that is one thing that, that they need to figure out, I'm sure, as the economy moves forward, because that is not as strong right now.
Yeah, it is not strong. And this whole dynamic, of course, is not sustainable at all. So even if some country, right now they manage their trade relationship with China, given the tariff war, but going in the long run with the growing, dominance of Chinese manufacturing, when that trade surplus is growing bigger and bigger, that dynamic is not sustainable. But if you look at it internally, China has a consumption problem. That's why in the 15th five-year plan, Chinese government is all about changing from the economy from investment and manufacturing driven to a consumption driven. Historically, this is not the first time they talk about it. Almost 10 years ago, they also touch on the same topic, but after all these 10 years, nothing happened. So it's natural when the same talking point comes up this time around, people have doubts, right? But I think this is where the landscape has completely changed. If you think about 10 years ago, we don't have trade wars. The world is still a rule-based economy in terms of trade. But now China realized that if you let the trade balance grow bigger and bigger, for the short term it's good, but in the long run, it not only all of the other countries are not happy, but if they do something, that will also means economic headwind for the Chinese exporters. So they need to do something. So I do believe this time it's real, and it will have huge implications. So if you believe the Chinese consumption going forward is going to, grow a little bit faster, definitely faster than the last 5 years, then some of these consumption names, for example, stocks, if you look at their EPS compared to pre-pandemic, even though there are some of the staples company, their EPS come down anywhere from 20 to 30%, which is a huge amount for household consumption names.
Right. So the upside looks compelling from that standpoint.
If you believe that they are able to pull this off, then the upside is compelling.
And I guess, we're going to find out, but I mean, what are the levers that they have to pull to try and increase domestic consumption?
There is no one magic lever, so you definitely need to, first of all, stop the bleeding of real estate sector, because in the last 2-3 years, real estate has been a huge drag in terms of wealth impact. But once it stops bleeding, then that detrimental effect on wealth, people's personal wealth, will be okay. And then people will feel a little bit more comfortable and try to spend a little bit more. Another thing they need to do is to create more job opportunity domestically. When people get a job, they have income, so they are feeling more comfortable to spend. Yeah,
there's a lot we'll get into in terms, I'll just say probably the internal manufacturing side, and we'll talk about that in a second, but I want to just go back to trade if I could. And when I think about the latest trade deal announced between Canada and China, the focus for Canada was on agriculture, getting that back opened up again in terms of correcting past issues, as the Prime Minister called it, and also opening up the Canadian market a bit for new EVs. And I understand you think that this is almost Canada borrowing from China's playbook a little bit right now in terms of being pragmatic and doing issue by issue basis.
Yeah, exactly. So the reason why I say Canada is taking a page from China's playbook is if you look at China's approach to trade, is basically a very pragmatic approach. Now Canada is basically going on the same road, taking a very pragmatic approach. So that is very similar. Don't let the other frictions derail your trade relationship, right? Because that economic benefits generated, it will do a lot of good things to the economy. The other things, if you look at some of the sectors, for example, EV, the current Canadian strategy is basically repeating China's playbook a few decades ago. So back then, China has a very weak industrial base. They have nothing. So they invite the foreign company to set up plant, basically attract foreign direct investment, set up plant so that they get the capability going. Their workers get the know-how, and over time, there is IP transfer. Then they become the second-tier player. And after a few years, they leapfrog and become tier 1 player. Right now, Canada is essentially doing the same thing. Although I know some people might have doubts on the potential IP transfer, but I do think it is possible. So if you look at why US and China approved that TikTok deal, it's because China approved that, the IP licensing deal. And also when CATL, the very famous battery maker, trying to set up plant in the US, initially they are okay with the IP licensing and transfer. It's just they run into such a strong headwind politically in the US that in the end they gave up.
Can I ask, do you think there's greater, how much more integration do you think? I understand the IP transfer principle and the benefit to Canada that could provide, but people are worried about deeper integration. We hear of President Trump talking about free trade deals. Do you think this integration goes beyond this?
Right. So you mean integration with China?
China and Canada, yes.
Right.
Is there more to come?
Yeah. So I believe it's more of a diversification and resilience rather than integration, because Canada is a very close neighbor of US, and the US economy acting as a magnet, which completely attract the Canadian capital flow and trade flow. So from integration point of view, Canada will still be very tightly integrated with U.S. economy. But whole point is, in the last several decades, Canada has been completely reliant on it. So that strategic reliance, it turned into a strategic vulnerability.
Yeah.
So now is the time to seek some diversification.
We've been talking about China, Canada, trade worldwide, but I want to focus in on China and what you see. The markets have performed quite well. I mean, all equity markets have performed well, but how have the Chinese markets done over the last year?
It's doing terrific. Last year, I think it generated 30+% return,
yeah,
which is way better than either S&P 500 or NASDAQ.
And is that because of the same trends we're seeing in the North American markets? Like, is there a Mag 7 technology drive to all the markets that's also fueling Chinese equity performance?
Yeah, part of it is because, you know, some of those tech companies, they have their AI ingredient, for example, Alibaba, and also for Tencent, it's less of an AI play, but their gaming expansion into the overseas market is doing terrific. And this is just a terrific company generating terrific margin, and they have very powerful ecosystem domestically. So yeah, basically it's a story of that.
Yeah. What about the chip makers? Because I mean, one of the fascinating things, and I know you and I were chatting earlier, is maybe the controls that were put on the chips may have had an inverse effect in terms of the chip makers' outlook in China, looking better than not worse.
Right. Recently, actually, there is a whole wave of GPU chip company went IPO. So-called four little dragon of GPU domestic player, including MoreThreads, MetaX, Biren, and also Illuvitar. So all of these companies, if you look at their IPO, they are way oversubscribed. You know, in China, the IPO have online and offline subscription. The offline is reserved for institutional investor. The online subscription always oversubscribed. So I wouldn't even mention it.
And that's the retail investor.
That's a retail investor.
Yeah.
But even for institutional investor, some of these names like MoreThreads, they are almost 1,000 times oversubscribed.
Oh my goodness.
And the IPO, if you look at the performance since the IPO, up 400%.
Wow.
Same thing for the other GPU player. For the ones that went up less, it is anywhere around 50 to 80%. So they are doing terrific.
And why is that? Like, how has the, I guess, the intent on the controls that were put on the semiconductor companies to export to China backfired, that it's causing, I mean, obviously there's elation in the market, but what's the fundamental story to see that there's elation in the market?
Right, because the export control is counterproductive. Essentially, for the domestic GPU players, what the U.S. export control did is lock in a huge market for all of these domestic players. And as you know, the investor, when we measure or evaluate these companies, you know, they evaluate on the TAM, total addressable market. When you lock in such a huge market, you know, the Chinese semiconductor market, as a percentage of global semiconductor is around 30–40%. So that big of a market for the new domestic player to grow, you know, sky's the limit.
That's interesting. Where do you see other opportunities? You mentioned Alibaba, you said AI. Like, where do you see opportunities in the market, I guess, Chinese market, over the next little while?
Right. One concept that we are exploring is so-called application layer. So AI has different layers. There is this infrastructure layer, there is this foundational model layer, and then this application layer. So if you look at the past technological innovation, it is always the application layer that accrue most of the value. So for example, in the internet boom, the fiber build up doesn't accrue a lot of value. It doesn't capture a lot of value. In the end, the value was captured by the Google, right? In the mobile computing era, the 5G machinery equipment doesn't capture much of the value.
Yeah.
Most of the value are captured by the Instagram and Meta. So as you probably noticed, some of these companies, they appear in the later stages in the application layer. So that's why we are keeping a very high focus on what's happening in the application layer. What we observe is that for some of these big international giants like Alibaba, they are actually well positioned to implement AI in the application layer Just to give you one example, Alibaba has already integrated large language model into their e-commerce system so that as a user, you don't actually need to search for product and order. You just tell the large language model what you want to do, and it will cross-compare thousands of products for you and present it to you. All you need to do, say, is
Here's what I
pay
want.
or not pay. Yeah.
Oh, interesting.
Yeah.
Wow.
So it is accelerating what, in the old routine, what you intended to do.
Yeah. I've only got 45 seconds, Haining, and it's a bad question to ask you, but I'll say it quickly. You and I were talking about there's an explosion of innovation happening in China. Just in 30 seconds, tell me what you see and why it's important.
Yeah. Many people don't realize 2025 was the year of innovation explosion in China. So just to give you some of the examples, not only the EV, the robot that you often hear about, but in some of the more esoteric area, for example, quantum computing. China's quantum computer can already match the best performance of quantum computer in the world. And also the 6th generation fighter jet. All of these, without the deep industrial capability and innovation, you cannot create it. Yet China is moving towards that and continue to move very fast.